Activity-based costing, or ABC, is a management accounting method that helps organizations understand the true cost of their products and services by looking closely at the activities involved. Instead of spreading indirect costs evenly, it assigns costs based on the actual use of resources by each activity, giving a more precise picture of where money is spent. This approach offers several benefits. It helps businesses focus resources on the most profitable products, control costs more effectively at both product and department levels, identify and eliminate unnecessary expenses, price products and services more accurately, and even assess how profitable different customers are. To put this into practice, companies allocate costs to different activity groups, calculate rates for each activity, and then analyze customer profitability. This process supports smarter decision-making and improves overall financial management. COA manufactures and distributes fire alarms to retail outlets, and we're looking at how overhead costs are allocated using activity-based costing. The total overhead costs amount to £1.5 million annually, split between £1 million in manufacturing overhead and £500,000 in selling and administrative overhead. These overheads are allocated to 4 activity cost pools: assembling units, processing orders, supporting customers, and other activities. For manufacturing overhead, 60% is assigned to assembling units, 25% to processing orders, 5% to supporting customers, and 10% to other activities. Selling and administrative overhead allocates 15% to assembling units, 35% to processing orders, 30% to supporting customers, and 20% to other activities. The activities are measured by the number of units, orders, and customers, with total activity levels of 2,000 units assembled, 350 orders processed, and 150 customers supported. For example, the Red Alert customer places 6 orders per year and purchases 100 fire alarms annually, where direct production costs are £250 per unit and the selling price is £700. The costs are then allocated to each activity pool, with manufacturing overhead split as £600,000 for assembling units, £250,000 for processing orders, £50,000 for supporting customers, and £100,000 for other activities. Similarly, selling and administrative overhead is divided as £75,000 for assembling units, £175,000 for processing orders, £150,000 for supporting customers, and £100,000 for other activities. Altogether, this gives us a total of £675,000 allocated to assembling units, £425,000 to processing orders, £200,000 to supporting customers, and £200,000 to other activities, which together represent the full £1.5 million in overhead costs. This detailed allocation helps us see how resources are consumed by different activities within the company. This example focuses on a company that makes and sells fire alarms, and we want to find out how profitable a specific customer, called Red Alert, is. We start by grouping all the costs into activity cost pools, which are categories like assembling units, processing orders, and supporting customers. Each of these activities has something called a cost driver, which is a factor that directly affects the cost, such as the number of units assembled, the number of orders processed, or the number of customers supported. Using historical data, overhead costs are allocated to these activities based on the proportion of time spent on each task. Next, we calculate the cost per unit of activity, called the activity rate, by dividing the total cost allocated to each activity by the total activity volume. For example, £338 per assembled unit, £1,214 per order processed, and £1,333 per customer supported. With these rates, we then calculate the costs related to Red Alert's activity levels, like the total cost of assembling their units, processing their orders, and supporting them as a customer. Finally, we compare these costs to the sales revenue from Red Alert and subtract the direct costs to determine the overall profitability, which in this case shows a positive margin of £2,631. This approach gives a clearer picture of customer profitability by linking costs directly to the activities that drive them. The processing order cost is determined by multiplying the number of orders placed by Red Alert by the activity rate for processing those orders. Similarly, the cost of supporting customers is calculated using the activity rate assigned to each customer. To find customer profitability, we simply subtract the total costs from the sales revenue. In summary, activity-based costing and activity-based management offer a more precise and insightful way to allocate costs and improve performance by focusing on the actual activities driving costs. This approach helps businesses spot inefficiencies, cut out processes that don't add value, and use resources more wisely. The result is better pricing, clearer profitability analysis, and stronger strategic planning. Ultimately, these methods enable managers to make decisions that align operations with company goals, fostering a lasting competitive edge.